is March 13th of 2023. Last week on March 9th, Silicon Valley Bank, a top 20 bank here in the United States and one of the largest banks for technology and startup-based companies, one of the largest deposit holders for startup and technology-based companies, went into a collapse. There was a run on the bank. There were $42 billion in withdrawals requested in one single day, which was more than 20% of the bank's registered deposits, which caused a meltdown and a lockdown on the different funds that these companies had access to. And as we write, a lot of technology companies, where companies all over the United States, and not just companies in Silicon Valley, use Silicon Valley Bank, companies throughout the entire country and really the world use Silicon Valley Bank. If they're kind of in that startup, venture capital, PE company world, they're using this bank and the tools and resources that it's developed specific for technology companies. So there's a huge swath of our ecosystem, 200,000 plus companies that have been impacted by having their funds locked up. And we've gotten calls, specifically the call started Friday, they went in through the weekend, and here we are on Monday, March 13th. And it looks like, per an announcement that came out last night on Sunday, that the government is going to step in and make sure that depositors are taking care of it. There's been several different reports, so not 100% sure at this time. Wanted to get this video out just so you can understand some of the insurance ramifications to this. But it looks like depositors are ultimately going to be squared up by the federal government in some way, shape, or form, whether that's insurance, upping the FDIC, or just completely backstopping those deposits, providing loans, bridge loans, whatever it's going to be. If it's something similar to the TARP program that we saw in 2008, 2009, all of that is yet to unfold. But the government did come out and kind of put depositors in Silicon Valley Bank at ease. Now, there have unfortunately been a couple other runs on small regional banks that associated with this, and there could be other runs on banks, particularly small regional banks, kind of tier two banks that would be the JP Morgan, Chase, Bank of America, Citigroup type banks. There could be a run on those. So the question is, do you have insurance coverage for this kind of issue? So you have plenty of money in the bank, you're making great decisions, and you go to pay your employees or pay a vendor or just take money out to put capital in for some other capital improvement, et cetera. And you just don't have money. The bank has collapsed. The bank is not releasing money. The bank is not allowing you to wire transfer. Maybe your credit facility or mechanism that you have is locked down if you have a line of working capital or whatever, because this bank is on its way to insolvency. When that happens, there is a very specific commercial insurance coverage that you need to have. Okay. Now, most people will initially think, what about business interruption? Standard business interruption, the standard business interruption policy form will not cover this type of issue, a bank not being able to provide you with your money so you can pay vendors or pay your employees. That is not standard business interruption coverage. Is going to cover the named perils, the listed perils on a policy, which in this case, a vendor or a partner type company, which your bank essentially is, bank going insolvent is not a covered loss on your policy. Therefore, you have to have an additional form of business interruption coverage called contingent business interruption coverage. And I'm going to actually read from the policy form itself here. So apologize if I look away from the camera, but I want to get this right. So basically, contingent business interruption insurance policies protect against losses from supply chain disasters, which I think we could consider, your bank collapsing a supply chain disaster or disruption, and may require the incurrence of property damage to trigger coverage. So there may be. So I want you to know that even though contingent business interruption coverage is going to be your best bet to get covered, there is no guarantee. Every carrier is going to address this separately. You're going to have to provide, information to your carrier. So I do not want you to think that this is a guarantee. That is not what I'm saying. I'm saying this is going to be your best bet for getting some sort of bridge or some sort of claim paid to keep your business afloat in the event that you are working with a bank or using a bank that ultimately collapse, right? When you have supply chain disasters or closures occur, the suppliers, vendors, or other companies that they rely on the business may be eligible for payouts through contingent business interruption coverage. And these policies can provide businesses with cash to help pay payroll, rent, other expenses, et cetera. So basically, if you can't pay your bills, you have a rent payment, you have vendors that are, that you do payments, you have, most importantly, you have to pay your people. any of those types of things, you can put a claim in because of this business interruption that's happening with your bank. And there's going to be a whole process. Unfortunately, you may not get that money in a snap, but this is going to be your primary mechanism for finding coverage on your policy. You're going to want to work with your agent, talk through with them. You're going to want to work closely with your carrier. You want to document what expenses are starting to stack up that you can't pay because you don't have access to your money, and then work with your insurance carrier to make sure that you're covered for a period of time in which you can start to recoup more income from your clients or your customers so that you can start to get back on track. Now, again, it looks like in the Silicon Valley Bank example, these depositors are going to be taken care of, which in my opinion is the right thing to do. Let the bank collapse, but make sure the depositors are taken care of. That feels like the right mechanism. It feels like what is actually going to happen. But be very careful. If you're with a tier 2 bank, which unfortunately our banking system has an unofficial tier system. There are the big four, JP Chase, Bank of America, Citibank being, 3 of the big ones. And then really everybody else in terms of deposits and integration into the system. If you're with one of those tier 2 banks and they collapse, or even a tier 1 bank, but that seems after 2008, 2009, it feels like that would never happen. But these second tier banks, if one of them starts to collapse and you have your money there, contingent business income is going to be the way to protect yourself. If you are worried about this, do not assume you have this coverage. Just because you have a BOP or a business owners program, which comes with a package of coverages, do not assume you have this coverage. Talk to your agent. If this is a concern of yours, add this coverage. It's probably not going to be incredibly expensive, and you may already have it, but it's very dependent. It is policy specific, carrier specific. Talk to your agent, talk to your carrier if this is a concern. But contingent business income, separate from regular business income, is going to be your best chance of getting a claim associated with a bank collapse and not being able to get your funds covered for your business. If this is the kind of relationship that you enjoy, would love to have with your insurance agent, we would love to work with you. We'd love to walk you through these things. You can, somewhere around this video, there's going to be a link or a button. There's 2 ways you can get started with us. You can either choose the do-it-yourself option, which some people like, but most people prefer to work with an agent. If you want that, we have a bank of licensed agents spread throughout the country that we will match you with, who can help work specifically with your industry and answer your questions. And we would love to do that. You can also give us a call anytime, 518-960-6600, whichever way you choose. We look forward to working with you.